watching Nvidia, another blowout quarter. Analysts at Mizuho, JP Morgan, and across the board raising their price targets, many of which are above $600. In the meantime, our panel is ready. Andrew Wang, managing partner at Runnymede Capital Management, and Angelo Zino, senior equity analyst at CFRA Research. Thank you both for being with us. So it was really about, it was a great quarter, Angelo. The outlook, it was concerns the negative impact and the export restrictions to China, for example, other countries, where they said on the call, actually saying that export and sales to these destinations will decline significantly. And, you know, that word significantly is a little worrisome. At the same time, everybody's still loving Nvidia. What are your thoughts?
Yeah, so, you know, as far as the quarter is concerned, you're absolutely right. I mean, it was a pretty good quarter. It's very difficult to really knock on Nvidia at all in terms of the numbers that came out, both for the October quarter and the January quarter guide. To your point, I'd say the only blemish was kind of the China commentary out there. But despite the fact that you're seeing a sharp decline here in the January quarter, the revenue number is holding up extremely well, and a big reason for that is because of the insane amount of growth that you're going to see all across the globe, not only in the U.S. but in other countries across the globe, ex-China. Now, I would say kind of the one positive out there is the commentary on the China side of things is they are looking to essentially kind of try to circumvent some of the potential China restrictions out there as we go into calendar 2024. We think they're going to be able to do that. So there is potential upside in China as we kind of go into the April and June quarter, which could potentially be a catalyst as we look ahead as far as Nvidia is concerned.
What's your current target now?
So our current target price is $600, and it's based on about a 28 PE on our calendar 25 EPS estimate.
Mm-hmm. And Andrew, as I look, you know, obviously revenue was impressive, and particularly data center revenue, which was up 279%. They're working on new products that are more compliant with some of the policies that have been put in place. But other areas, the gaming segment and more, they announced their new GH200 GPU. All of these things, will that help to drive Nvidia higher, in your opinion?
Yeah. Well, I think that the recent shakeup at OpenAI really focused on how the firm should be run and highlighted a broader discussion about how fast the arms race to develop AI technology should be moving. Of course, Nvidia is best positioned to monetize generative AI today. You're absolutely correct. I think that the narrative on Nvidia will continue to be dominated by the data center business. The company's share of data center compute market has grown from 15% 5 years ago to 70% today. And for the first time, networking exceeded an annualized revenue run rate of $10 billion, with networking revenue increasing 52% quarter over quarter. So I think that there are many different growth areas here. I like that the product mix was also very healthy, record-breaking margins. So I think that even though it's difficult to look at traditional valuation metrics for a company that's growing so rapidly and gets a premium, but if you look at PE, the company's median PE over the last 5 years has been about 40 times. So the range that you're talking about, seeing analysts' price targets in the $500 to $600 range, fits in there.
Yeah. Angelo, you know, one of the things the CFO noted when I said the concern significantly seeing sales decline in China and some other countries, at the same time saying that should be offset by strong growth in other regions. Where are they seeing strong growth?
I mean, pretty much everywhere. If you kind of hear what Jensen Wang has to say, at least kind of the opportunity out there over the next couple of years. I mean, really, it is kind of still U.S.-centric in nature in terms of where kind of the most of that demand is coming from. You kind of look at some of the CapEx plans out there from the likes of Microsoft and Alphabet, and even the likes of Meta and what have you, and they're sharply higher going into 2024 versus 2023. Part of it is kind of the improved profitability from these companies. The other part of it is the fact that you need to spend significantly on compute in order to kind of, upgrade your infrastructure for kind of, more AI type workloads out there. So a lot of it is, clearly coming on in the in the U.S. And Nvidia is really kind of pushing the limits here when you kind of think about what they're doing in terms of kind of reducing the cadence in terms of kind of new chips that they're launching from about a 2-year cadence down to about a 4 to 6 quarter cadence. You talked about the H200. Likely Blackwell is coming out in the second half of next year, going to come out with higher price points as well. So when you kind of look at the revenue trajectory here going into calendar 2024, it still looks extremely positive for Nvidia, and the visibility, again, it looks pretty good here over the next couple of quarters.
Yeah. All right. And quickly, Andrew Wang, just what kind of names do you like? I mean, I'm out of time, but I'd love to hear picks for our viewers.
Okay. I think that there are different ways to look at AI. Of course, you can look at a Microsoft. If you're looking at semiconductors, watch AMD because they have a new product launch coming in December, which is expected to perform well.
Ah, okay. And what's your favorite these days, Angelo Zino? Favorite
I mean, we
stocks?
do still like Nvidia. We agree with the AMD call. That's probably a better growth play at this point in time going into 2024 for AI. And then, on kind of more the software-centric side of things, top play continues to be Microsoft. So, those are kind of some of our higher quality AI type picks out there.
Andrew Wang, Angelo Zino, thank you both very, very much. Great to see you both.